Good morning. Welcome to Beyond Business Limits podcast. My name is Samuel Petko and I'm your host. I'm a business owner and a business investor, and through my two companies, Scale Up Outsourcing and Prosperitas Investment Group Limited, I bring resources and solutions to those who want to accelerate their growth. If you want to see any future videos and our interviews for hints and tips about how to run the business, subscribe to this channel. So today I have a special guest, Steve Rooms, who is a serial entrepreneur, owner of an accounting group, private investor, and an M&A specialist. So, Steve, welcome to our podcast.
Morning, Sam. Yeah, thanks for having me on.
So, thank you for coming. And yes, let's start with an introduction. So, can you tell us what you do, and someone who doesn't know anything about you, what you are involved in?
My background's accounting and finance, so I'm a qualified accountant. So I qualified back in the year 2000. During corporate life, I'd worked as part of a PLC. I worked at CFO level, and I was also part of an M&A team. So that took me traveling into Europe, and I was involved in various M&A deals, but albeit a small part of it. I set up my own company back in 2009, and that was to provide accounting and financial consulting services. If we fast forward to 2000, COVID comes along and all of the consulting work stops. And that was a time for me to go back and revisit mergers and acquisitions. So I went and found the right people to teach me or to help me to fill the gaps in of the knowledge that I didn't have. And from there, I went on to buy a company, my first company, back in September 2020. Since then, I bought 6 others. We're hoping to complete on another one in July. So we're in July now. So at the end of this month, we're hoping to complete on another one. Sold one business, and we do an awful lot of support work for other private investors where they don't really understand the financials. So we will help them with deal analysis, help them to understand the strength or otherwise of a business that they'd like to buy. And within the accounting groups that we're putting together, we provide all of the what we call the compliance services, but then what we really want to then do is provide the business advisory side as well, which we think adds significantly more value to clients. So in a nutshell, yeah, that's what we're doing. So it's never 2 days alike, and it's pretty good.
Okay, you probably answered some of the questions I didn't even ask yet. So, okay, if I can go back to when you were starting your accounting practice, so suddenly from the corporate world, you became a business owner. So how that transition, felt like? What did you need to learn at that stage of your life?
Yeah, in some ways it's a terrifying step because you just don't know what's going to happen. So you kind of take a leap of faith. But the way I kind of softened that a little bit, I'd been working with a number of financial recruitment companies, and they had an awful lot of contracts that they needed to support with. So I started to work on some of the financial consulting side with some of these providers. And in the meantime, I was then able to build up a bank of clients as well on the accounting side. And that was the way that I led into started to build up the accounting business. So I was doing quite a lot of work for people like BP, for a number of red brick universities, building financial models for them. Kia Group, we did quite a bit of work, Smith and Nephew. So that kind of paid the bills whilst I was building up the client base.
Okay. Oh, that's good. And how was your knowledge of marketing and sales? So was it a very new area to you? Did you know how to promote yourself, advertise your services?
Very new to me. I'm not marketing. I would never say that marketing is a strong point. That's where I go to people who do understand it and do it much better than I. So at the time, it was more about the people in my network who I could reach out to and say, look, this is what I'm doing, whether it's people within the finance sector, in the recruitment sector, or if it was people just within my general network. I was reaching out to them, attending networking events when I could. But in terms of online marketing or any social media, I wasn't doing anything like that.
Okay, so I would like to go back to the services because you mentioned compliance, you mentioned advisory, and so on. I think many people who are non-financial experts or they are not from finance background, they may not know exactly what it means, or they put everything into one basket and they think, oh, it's accounting. So maybe if we can break it down, what accounting services are there, basically what the client should be looking at. So let's start with the compliance. If you can explain what covers the compliance work.
Yeah, of course. The compliance includes bookkeeping, so a lot of transactional work to make sure that all of the various sales and purchase invoices, bank reconciliations are all done in whichever accounting solution is being used. Year-end accounts, tax calculations, self-assessment, payroll. So there's a whole range there. The VAT returns, CIS. So it's a standard accounting support that you would find from most accounting businesses, where it's just involving activities that the typical business owner don't want to get involved in, they don't have time for it, or they don't understand. So yeah, so those are the typical services that are provided.
Okay. Would you think that business owners in general think that compliance is a necessary evil, or basically they don't see much value in that work?
Yeah, because they're not earning any money for doing it. It's just so that an accountant can tell them how much tax they've got to pay or how much money they've made. So a lot of people do see it as a necessary evil. Yeah, I think the turn of phrase you've used there is spot on.
Okay. So I believe you know a lot of accountants. I know quite a few accountants as well. And because we are from accounting backgrounds, you and I, we can recognize and we can see who is doing a good job or who is not doing a good job for their clients. So from your perspective or your experience, did you come across anything which you would like to maybe share with the viewers? What to be mindful of when they are choosing accountants for a compliance work?
Yeah, we speak to an awful lot of accountants, particularly around merger and acquisition side when we're looking to acquire new businesses. And there's a distinct difference in the approach between younger accounting business owners and the older ones. But I think whenever you're choosing a new accountant or you're looking to bring in a new accountant, spend a bit of time in getting to know them and find out how they deliver their services. What you really need to understand is how will they look after you? Is it cloud-based? What accounting systems are they going to be using? Is there a point of contact that you've got? Because quite often, one of the things that we hear time and time again from business owners who get frustrated with their accountants is, well, I just want to ask a question. There's something I don't know and I need to ask a question and I cannot get hold of my accountant. So it's that speed of response. If you're approaching somebody for quotes, if you approach them for a quote and a week goes by and you've not heard anything, are they the right people? Because if it's taking them a week to provide you with a quote, what will they be like once you've signed up with them? Is it going to be you forever chasing them just to get some basic information, or you can't get the advice that you need? So always look at the types of service and the responsiveness of the accountants who you're looking to work with. Almost interview them. Just make sure that you're completely satisfied with the responses that you're getting and that you're happy that they will give you the services that you need. And also understand you might need a certain level of services now. Are they trying to sell you a service that you don't need? Or are they trying to put something together that says, look, this is where you are now, but let's keep in the back of our minds that this or this service could be useful to you at some point in the future. But let's just keep that in mind for now, but focus on the compliance side or these particular sets of services that we've suggested.
Okay, so I understand that the conversation needs to be a dialogue, an interview from both sides. Yes, so the same way how the client should interview the accountants, we are interviewing the clients as well.
Yeah, and I think it's something that it's really important for acquiring businesses. That's obviously, as you know, it's something I've done a lot. The key thing is building rapport. So if you can start to build rapport with your potential new accountant, and you get a feeling that actually, yeah, I've got confidence that this person will, or this company will deliver the services that I need. That goes a long way. If on the other hand, and you've got somebody we can't get hold of, or they're a little bit evasive, or you just don't like the way that they come across, well, then that accountant might not be for you.
Yeah, that's true. Okay. So starting with compliance as a baseline, what would you suggest clients can, utilize? What kind of other services as a next step?
As the businesses grow, they may need some support with their own growth plans. So, and this is where you and I differ in our approach, Sam, is that we want to help people to grow the businesses. It's one thing telling them how many sales and profit, how much profit they've made and how much tax to pay, but it's a whole different thing helping that client to go from £500,000 in sales to £3 million in sales over the next 3 to 5 years, or whatever their aspirations are. And that's where it becomes more and more important. And I think that's where accounting needs to go, is that you need to be more of a finance partner where you can support them through that journey, through that process, help them to put a roadmap together, help them to put forecasts in place, and then hold them accountable. You're going to have a weekly call or a monthly call or a monthly call where you're going through all of that strategy to get them from the £500,000 to £3 million in this example. And you're looking at the various milestones, right? How are we getting on? What can we do to support you? So that's where I think there's a hell of a lot more value to be provided by accountants by helping clients look towards the future rather than be stuck in the past.
Yes. Yeah, I agree. And yeah, when we spoke about the accounting firms, at least from my experience, there seemed to be this approach where, yeah, there is an interview, but everybody takes everyone. So there are probably very few specialists or those who want to work with a niche sector or niche market. There is a lot of accountants and bookkeepers who would take any client. And that can backfire because suddenly 6 months later, 1 year later, they may realize they are not the right fit. They may not understand the problems the clients have, or the clients may not understand the work accountant needs to do. Yeah, that's coming out of the experience which we have, not just talking to potential clients, but also you and I talking to other accountants.
Yeah, as we know, we've spoken to one particular business owner where they would take anybody who walked through the door. And then if you look at the average fees per client, it was really low. And this was an accounting business that was really struggling to make any serious money. So they really needed to look at their ideal clients and the sorts of clients who they were prepared to work with. Because if you're not careful, you can end up with a lot of clients that are really low margin business and can often take up an awful lot of your time, and it stifles growth. So you've got to be really careful and be really clear on the type of client who you want to work with. It might be of a certain size. As you've just rightly said, it could be in a certain sector. But if you can get clarity around that and know with the company that we work in, we've got real clarity around the clients who we work with. And that's really important. As I acquire accounting businesses, we go through an exercise where we grade every one of the existing clients. So every one of the clients has a client manager. So we all sit down together and go through and grade them A, B, C, D. And it makes people laugh when I say it's in PITA, P-I-T-A. And people say, well, no idea what that is. I said, well, they're a pain in the ass. And those are the ones that take up too much time. They're always late bringing their information in. You don't make any margin, and they don't particularly pay on time. And those are the clients you think, well, why are we dealing with those? So, because if we didn't work with these clients and we had more of the A and the B grade clients, the business would be more profitable. We could give more time to our existing clients, and it works all around by having the right balance and the right type of client that fits your particular organization.
Yeah, that's true. Maybe I'm jumping to a different topic, but I've come across, various franchising models. And usually the experience of those clients, at least those I spoke to, it's not very positive if they deal with accounting firms which are based on franchising model. So there are a few which are well known, probably in every town, and they usually have very fancy offices, but there is only one person sitting there, and they seem to be having this approach: we take anyone who will come through the door because they already have huge overheads. But when I spoke to a few people who were using or maybe wanted to use the service, they were not necessarily impressed. So what's your take? What's your opinion about this type of accounting firms?
Yeah, I think on the positive side of the franchise organizations, all of the systems and processes are pretty good. Somebody's taken the time to look at the way that they're going to deliver a service. Excuse me, but the flip side of that is, you're right, what you just said, they take anybody on. All they want to do is to fill their books with clients. They don't necessarily pre-qualify them, or they just want to take more and more clients on because they've got certain responsibilities under their franchise agreements. And the downside of it, if you're a business owner who buys a franchise, you're restricted in what you can do. There are certain do's and don'ts that you're able to that you have within that franchise structure. So if you've got any ambitions to grow, you can buy other franchises, or what do you do? Because you can't, you're going to have some restriction placed upon you.
Yeah, I agree. There are pros and cons, but it's a double-edged sword. Because someone who doesn't have experience maybe can buy a franchise and work under the umbrella of bigger accounting firm, but they not necessarily have the experience or expertise to take any client.
Yeah. Yeah, absolutely.
Okay. So going back to the services. So we started with compliance, then you explained some fractional work or advisory. So what do you think, what type of client would benefit from management accounting? Because again, when I see and I follow other accountants on LinkedIn, for example, the usual sense I get is that the clients don't appreciate management accounting. So what's your opinion?
I think the larger businesses see the value in it, particularly as the business starts to grow. If you have fluctuations in gross margins, or you need to understand the profitability, or you need to understand where you are against a particular target, if you're an ambitious owner with plans to grow to a certain size, then anything measured grows. It's a saying that we know from one of our contacts. So anything that you measure grows. So if you can put something together that says, this is what I'm aiming for, then if you're producing monthly management accounts, you know exactly where you are in that journey. You know exactly how you're doing against where you thought you should be. So, and one good example is I've been working with a client recently where the gross margins were starting to fall, and it really started to impact on the profitability of the business. But they didn't understand why that was the case. But they had 6 different revenue streams. So I said, well, okay, what are the various revenue streams, and what is the profitability of each one? And they didn't know. So we went through an exercise to identify how each one was doing. There's one particular revenue stream that was making a gross loss. And it was real eye-opener for them, because once they identified, okay, here's the problem, now they can go and fix it, rather than waiting to the end of the year for their accountants to say, well, yeah, your gross margins are down, they're at 25% and you've broken even, or you've made a loss. And then you've got to think, okay, well, so what do we do now? By that stage, it could be too late. By that stage, you could be starting to experience cash flow problems. Whereas if you're producing monthly management accounts, you're seeing, you've got visibility of it there and then. So you can address it in month 2 or month 3, whenever you start to see it. So that when you get to the year end, you're in a much stronger position because you've been able to deal with it.
Yeah, definitely. And yeah, probably, as you said, the larger the organization, the more important it is to monitor it. But I can see a lot of benefits even for small, tiny businesses to actually implement monthly management accounting. It doesn't need to be an expensive exercise, but it's important they know every month where they are with the business.
You're right. And I think one of the advantages now is because accounting software has come on an awful lot. At one time you really had Sage and that was it. But if you look at where Xero only, so if you look at Sage Xero, for example, they have a full suite of reports, including management accounts. So at the click of a mouse, you can very quickly produce a set of accounts that include your profit and loss account. You've got an overview, which includes your cash flow. You've got aged debtors, so you can see who owes you money. You've got aged creditors, so you can see who you stole money to. So there's all of the basic reports are there and are easily accessible. So, and there's also a budget manager in there, so you can produce an actual against forecast both for the month and for the year to date. So the new accounting software, whether it's Xero or QuickBooks or the other ones that are available, have these reports. So there's no excuse for an owner to not have that visibility. Now, sometimes it may need a little bit of extra work to get right into the detail of things like gross margin reports. But again, Xero has something called tracking reports or a tracking facility, which enables you to break things down by revenue stream, or however you really want to slice it and dice it. It's possible to do it. So yeah, there's even for the smaller owners now, it's more accessible. Absolutely.
Yeah, that sounds great. A lot of good features. It almost sounds too easy. But I would like to point out that even though you are explaining it, it's a click of a button. I think someone who is non-financial person would still need a support from someone like us to interpret the data.
The other point to this as well, whilst we're seeing more and more artificial intelligence being built into accounting solutions, and Xero is a good example. They've got HubDoc. There's something called Dext, so you can quickly put transactions into the software now without as much effort as it used to have to do. But it still needs somebody to sort of sense check it. And quite often the business owner has got a million and one things to do. They come into the office on a Monday morning and they've got to deal with staff, or they've got some marketing to look at, and there's all of these different things that they need to do. So my advice would always be have somebody else look after all the accounting side for you. Just let them do the bookkeeping and the payroll so you can get on with running the day-to-day and be more focused on the strategic sides of the business, making sure the business is growing. And then you can have somebody like us can just say, right, okay, we've processed all the numbers. We can now tell you what the accounts are showing you. We can help to explain it, because it's one thing providing somebody with a set of management accounts. Will they read them? I think where you get the more value is you provide the management accounts and then you sit down with them and say, this is what we see in these accounts. And anything that we think needs to be pointed out to the owners, we will point it out, and we can also help them to put a plan in place. If there's something that's going a little bit wrong, we can help them to put a plan in place to sort that out.
Exactly. Yes, it's that interpretation of data and the advice. So that's again for the viewers who are not accountants. So now you explained another level of service. Yeah. So would you call it advisory, or is it management accounting, or how would you describe that next level above?
I think it's business advisory is the way I describe it, because that includes things like management accounts, forecasts, cash flow forecasts. It can be if an owner's looking to sell, they can help them to prepare for a sale. You can help them with the merger and acquisition process, which unfortunately a lot of accountants don't provide. So you can provide that as a business advisory service. You can provide the growth support, so you can help them to put a roadmap together. You can help them. You can kind of be their accountability partner, because in some of the activities that I get involved in, you tend to find that people will get on better if they've got an accountability partner, because they don't want to let their accountability partner down, or they don't want to turn up to a call on a Tuesday morning to talk about what they should have been doing last week, because it's embarrassing for them. So think, right, okay, I need to get this done. But they also know if they do get stuck, they can also contact their accountants and say, right, I'm not really sure what I need to be doing with this. And it can be a quick 30-minute call, an hour's call to say, right, okay, let's sit down and talk about it, and let's get you back on track.
Yeah. And then, so that's basically helping and sorting accounting for a client. And then you touched upon the mergers and acquisitions. So if you could explain the process and what type of service is at the pre-stage, during the acquisition process, and after the acquisition process.
Yeah, so to anybody looking to acquire a business, we can support them. You and I can support them from end to end, whether it's pre-deal or post-deal. So in terms of pre-deal, we can certainly talk them through the acquisition process. We can attend calls with the sellers. So we can help with financial analysis, whereby we look at 3 years worth of accounts and current year management accounts, and we can put together an analysis of how we think the business is currently performing, a particular acquisition target, should I say. We can then put a valuation together. We can put forecasts together. And if we know what the forecasts of the business are, then we know how much cash the business will generate. And if we know that, we can then look at what sort of deal structures could work. So pre-stage, up to there, that helps a potential acquirer of a business understand how well the business is doing or not. It helps them to understand what the valuation could be. We always say that the right valuation of a business is what a seller and a buyer agree. But we can provide that guide as to what, it could be, we'll think it should be between X and Y. Then at least then we can go back and have a conversation with the sellers about that. If we get to the stage where we've put together the evaluation, we've helped them with the deal structure, and the conversations have gone well with the seller that we may or may not have been party to and attended the calls with, they then get to the stage where they've agreed a deal in principle. So they move to a document called heads of terms. Now we can help them to draft those heads of terms. We've got templates and documents that we use in our own deals. And we can help them with financial due diligence. Now, due diligence is the stage where heads of terms have been signed and solicitors have been engaged. And then this is what we call a data room. So it's an online secure storage area that where we upload, or the seller uploads, all of the key data documents relating to the business. So with us, we've got a due diligence questionnaire, as you know, that covers 16 different areas of the business. And that's from incorporation documents, it's from contracts of employment, contracts for delivery of services or products. It could be any potential litigation that's going on. So it's everything that relates to that business that will help a potential buyer to understand, is this a good business to buy, or am I seeing anything in this data room that's a red flag that worries me, that either I need to resolve with the seller and understand it, or is it just too much that actually I'm not going to go ahead with this because I just see too many things that bother me. So we go through that due diligence process and we will support them with that. There's also something called quality of earnings, where anybody buying, and this is more common with e-commerce businesses where you've got a high level of transactions. You really want to be satisfied that those accounts give a true and fair view. So we will look at all the transactional side of that business just to make sure that the sales are correct and nothing's been artificially inflated in order to artificially inflate the price. So we can do that. That's another service that we can provide. But once we've got all the way through, whilst the due diligence is going on, we can help with a buyer with a consultancy agreement. Any deals that I've done in the past, I've always had a consultancy agreement as part of a handover process. So that will help the new owners work with the outgoing owners to make sure that we understand as much about the business as we possibly can. And we're trying to get all of that experience, or much of that experience, out of the seller's head into our heads. So, it gives us the best possible chance of being successful. So we can support with a consultancy agreement and even the first draft of a sale and purchase agreement too. That takes us up to the point of completion. On the assumption that everything goes well and the deal completes, we can then support post-deal. We can help to put in place all of the financials, the management accounts, the forecasting. If they need to raise finance for a deal, then we've helped them with business plans. We can provide that. That's another service we can do. That can often is pre-deal. But there's a whole range of services afterwards where we can help them to set everything up. It might be a dashboard. If a particular buyer owns a number of businesses, well, they don't necessarily have time to go through all of the detail, but what might be useful to them is a dashboard for each one of the businesses that they own. So at a glance, they can see how well a business is doing, and they can see also if something's starting to dip. And if they do see things that are starting to go wrong or not quite up to the standard that they expect, then they can jump on a call and say, right, okay, let's understand what's happening. What do we need to do to reverse that trend? So there's a whole range, right from the initial contact with the seller all the way through to post-deal, and that providing that finance and accounting support for the new owner.
Oh, that's excellent. Definitely a lot of value in the process from the accounting side. Okay. So now we have a good overview of the services, what a good accountant should provide and what you are providing. And at the end of the video, we will mention in what capacity we are working together. So there will be some news at the end of the video. I would like to touch upon maybe some topic from your own experience. So would you be able to give some advice or tell us about experience with clients where something went wrong, or you were fixing some sort of problems for new clients?
Yeah, we've had one recently, and it's a company down in London who we worked with, and they've been a client of ours for 2 years now. Now, they initially came to us because they're in a situation where they weren't being provided with any management accounts. And then, just as we've just been talking about, they got to the end of the year and they looked at the balance sheet, and there was over £100,000 worth of overdue PAYE and VAT that the accountants, they just had not tell the business owner about. Now, the particular business owner doesn't understand numbers, so they're heavily reliant on their accountant to help them. So whilst submissions were being put in correctly for payroll and for VAT, nothing was being communicated as to what the liabilities were. And it built up and it built up and it built up. And it created a problem where, as the new accountants, we approached HMRC. This is the situation we're in. We want to resolve it. And can you work with us to put a payment plan in place? Because otherwise we've got this is a business that could really suffer or even fail unless we do something now. So we worked with HMRC to put that agreement in place, and the business now is back on its feet and starting to grow. It's got some really exciting contracts in place, but without that initial communication from the old accountants, it wouldn't be here today, because HMRC could have taken a very different view.
See, okay. Well, that's shocking and also interesting at the same time.
Yeah,
and
I think one thing I'd just add to that as well, if HMRC sometimes get a bad rep, but if you approach HMRC and say, we've got something wrong, this is what it is, they are really open to having a conversation and working with you to help you to resolve it. They don't want to shut businesses down, and they don't particularly want to put people out of jobs. So if there's a solution, they will work with you as far as they can to find that solution. If, however, you've kept things hidden and you think it might go away, and they find it very different, because now you're in a position where you've deliberately tried to avoid paying tax, or you've tried to do something that's not right. And then in that situation, HMRC will take a much different view.
I see. And are you quite often in contact with HMRC because of clients, or sporadic?
Fortunately not. No, we don't have that many clients who are struggling, but we have had some dealings with them in the past. I'd have to say my experience with them has been on the whole positive. I know there are situations where it can be difficult to contact them, and that's something they're resolving now. But certainly my own interactions with HMRC have been positive.
Okay. All right. And so you mentioned what the previous accountants did wrong or they omitted. So what other examples you can give us where something can go wrong because of the accountant?
Yeah, I mean, there's another one where we've got another another client that you and I are aware of where there are two businesses. There's been no advice from the accountants how to best structure the accounts for those two businesses. So it ends up with one particular business has got a lot of VAT to pay, and another one has refunds all the time. But by just looking at the way the two businesses are structured and whether the invoicing is done, or by making something like a group election, having a group structure in place, it could solve a lot of that. Just by, so this particular case, we're working with this client, as you know, and we're looking to put together something that's a lot more structured, which gives the owner a lot more visibility around his own accounts, and just making sure that the cash flow isn't as lumpy as it has been. He's not having to 1 month pay this huge VAT bill, then waiting the following month to get the refund. It's all wrapped up into one consolidated payment, which is much lower payment than he's having to have to pay in the past.
Okay, good. And so I think one of the other questions which people ask, especially when I scroll through LinkedIn, they ask about fractional support or fractional CFO or any kind of fractional accounting support. So how would you explain to people who are not accountants, maybe potential clients, what does it involve? What it actually is if we provide fractional support?
Yeah, in my view, it's a really important service. And so if you've got a business that's of a certain size, you may not be able to justify having a full-time CFO. So what we have then is provide a service where we can work with a client and provide a part-time. So it's called fractional or a part-time CFO. It's done in various things, but essentially what it means is that you can get the experience and knowledge of the CFO without having to pay full-time salary. And the benefit is that CFO will be more forward-looking and helping you with raising finance, having good visibility of the account. They will support with strategy, and they can be much more forward-looking in nature rather than someone like a financial controller or a management accountant who tend to look at the transactional side and explain the history of it. Your CFO, your fractional CFO, will then be more forward-looking and strategic in nature. And as the business continues to grow, then hopefully it will reach a point where they can justify a full-time CFO as part of their management team. And until that point, it gives the business owner that flexibility and an opportunity to bring in knowledge and experience for a fraction of the cost.
Okay. And what would you advise for the companies? When is the right moment to maybe go from fractional to a full-time CFO?
Well, if you're looking at your monthly accounts and you can see that the business is now significantly improved, or it's at a point where you can justify paying that salary without causing the business any cash flow issue, then that's the time when you think, well, it's now. And if you've got particular growth plans, you want to expand the business, or you might want to get involved in mergers and acquisitions. You may want to bolt another business onto what you've got. Maybe that's the time when you bring in that person who can give you that full-time support, because the business figures that the accounts can justify having them as a full-time person.
Okay, good. And you mentioned also accountability. So regular meetings with the clients and keep them accountable. So what type of questions, or how do you keep the clients accountable?
Well, first of all, we sit down and we have a strategy session, so we understand what it is that the client really wants to achieve. And so as part of that, it will be long-term goals for the business, long-term goals for themselves. And once we can understand what their end goal is, we know where they are today. Now we've got a gap. So we think, right, okay, now we can start to plan what that gap is. If they've got aspirations to sell the business for the magic £1 million, but the business is currently worth 400,000, well, we can work out what does the business need to do in terms of revenue and profit in order for it to be valued at £1 million. And that might be a combination of improving gross margins. It might be bringing new revenue streams, or going into new markets, or introducing new products or service, whatever that happens to be. But we can start to put together a roadmap that helps them to get from A to B. And at that point, we can break it down into smaller bite-sized chunks. If you're saying, okay, well, the plan is we're going to go from 1 million to 3 million, well, that's a big ask. And you think, well, where do you start? But if you're breaking it down into, well, this month it will be this, over the next 3 months we're aiming to do this, over the next year it will be these different activities. And then once you've got that list of different tasks and objectives that you want to hit or achieve, that's the point where the accountability becomes important. Because you may say, well, we're going to actually introduce this new product by the end of, we're now in July, by the end of September, we want to introduce this new product. It's nearly ready, but not quite. So, right, okay, so as part of our accountability, what do we need to do to get that product ready product or service ready for sale. And that forms part of the accountability discussions.
Okay, yeah, that's quite clear and very helpful to discuss this topic. Okay, what about the business plan? So that's also quite an interesting topic. When people usually when they are starting business, they need a business plan, or some of the people start without a business plan. So what would you suggest? What type of business plan? What it needs to include? Why is it important?
So a business plan, I always recommend that people have them, and I always recommend that people should review them at least once a year, because things change, and business, it could be that the market conditions change or something else, an opportunity presents itself that's good for the business. But if you sit down at the start and put together a business plan and let it evolve over time, at least now you've got a focus. Because the temptation is, there's a phrase, fly by the seat of your pants, you'll be tempted to go off in all of the directions. Something will come along and think, that's good, we should do that. But that's not part of what your core offering is. And all of a sudden you've got all these other directions that you're going in, and you're neglecting the thing that you're really good at, providing a really strong service. So it forces you to think about, what is it that we're really going to do? What is the products or services? How are we going to deliver it? How are we going to market it? What resources do we need in this business in order to achieve it? And over a course of my business plans always include 5-year financial forecasts, which include assumptions around building the team, or growing the revenue streams, or looking at margins, or what overheads are going to be needed. So by doing that, you're forcing yourself to address issues that might be a little uncomfortable, and some things that you might not necessarily know all the answers to, but it forces you to go out there and find those answers, either by working with people like you and myself who write business plans, or by speaking to a marketing expert to say, this is what I'm trying to do and I don't know how to do it. So you can get that information and incorporate that into your plan. And as I say, once you've developed it, keep reviewing it and keep updating it. It's also a very good tool, of course, for raising finance. So if you're going to a financier or a private investor, the first thing they want to say is, well, tell me about the business. Now it's a slide deck or a business plan that describes everything about the business and showcases it in the best possible light.
Yes. So definitely it's an important piece of work and a document, not only at the start, but as you explained, during the journey, and should be revisited every year at least, shouldn't it?
Right.
Okay.
In terms of, how do you get involved in accounting, and what was your inspiration for getting involved in accounting?
Okay, so my experience is very different. So I did AAT course, and then I went to university and I did my degree. And during that time, I started to gain experience. And the experience was in manufacturing, in finance, and then with MultiAcademy Trusts. So MultiAcademy Trusts are, those who don't know, are institutions. Usually it's something between a charity and a commercial company. So it sits somewhere in between, and they oversee the operation of other public schools. So primary schools, secondary schools. So I worked in MultiAcademy Trusts, which were overseeing between 7 to 10 other schools, and I worked on the trust level. So we were responsible for exactly what you explained, Steve. So checking the management accounts, consolidating the accounts from various schools, putting it all together, balance sheets, and also profit and loss accounts, and also to actually do a lot of forecasting, because that's very, very important in public sector to do forecasting, because from the forecast, there is another important exercise, which is budgeting. And that's, again, quite important, even though small or tiny businesses don't do any budgeting. Based on my experience, it helps to plan for the future. So whilst the forecast shows what's happening in the next few months, the budget is what we want the next year or next few years to look like. So I was working on not only management accounting and forecasting, but also on the budgets on year-on-year basis. And as far as I remember, it was 3-year budget and 5-year budget for these institutions. And that taught me a lot, because it was from that bigger perspective. We are talking about multi-million pounds of revenue operations, so somewhere between 30 to 60 million. And the best ever job which I had in the manufacturing business, so their turnover was 180 million globally. So we were communicating with branches in South Africa, in Asia, in America, and putting the details together. So it was quite interesting work. And from my experience with small bootstrap businesses. So those who don't know or those who don't follow me yet. So I set up an education business in 2011, which is still up and running. It's an independent training provider. So I had that first-hand experience dealing with cash flow and cash flow issues with small and up and running business. Over the years, it scaled up. So we were covering quite a big part of East Midlands. And then during pandemic, everything switched to online delivery. So now it's pretty much nationwide coverage, depending on where the contracts are. And the other business, Scale Up Outsourcing, which is also the name of the podcast or the account of the podcast, that's an outsourcing and offshoring business. And again, I apply a lot of knowledge from accounting and finance, because when I speak to businesses and business owners who may be self-employed people, or they might be tiny, small businesses who want to grow, it also gives me that extra advantage because I can analyze and I can see the numbers and I can explain the numbers. So that gives me some advantage when I want to help the business to grow. And that leads me to probably the last topic of this podcast, and that's our collaboration, Steve. So we met some time ago and we realized that we have some synergies and we can start working together. So if you can maybe tell us about the new accounting firm which you set up and which we are going to build and support businesses together.
Yeah, of course. So as you're right. So we've set up Pro Growth Accounting. So we'll be providing the full range of both compliance and business advisory services. So the website will be ready, I think, imminently. So anybody who's looking to bring or looking for new accountants, where we're more responsive, we're cloud-based, we harness the technology, and the reason why we do that is so that we've got more time to provide the right quality of service and support for our clients. So if anybody is looking to get a new accountant, they're frustrated with either who they are or they don't have an accountant and need one, we'd love to have a conversation with you about you and your business, understand what it is you're trying to achieve, and then we'll help you to put a plan together to achieve whatever it is that you're looking to achieve.
Good. And I would like to add that, yes, you heard Steve, what he has been doing over the last 20 some years in my experience, and I think it's very beneficial to work with such accounting firm which been set up now, and also combining our experience from different sectors and industries. So as of now, we can announce that we are going to take new clients, and also we are going to post a link under the post where you can contact us, or you can fill up the form and we will get in contact with you. And before we start taking first clients, we can have an introductory call, discovery call, and see if we are the right fit. Because what you don't want is to get an accountant which is not the right fit for you and for your business. So that's our offer from us. We will be opening a few time slots every week for the introductory calls to analyze where you are at now, what's your current situation. If you already use accounting services, whether you are happy with them or you are maybe frustrated and you are looking for a change. So that's something which will be launched with this video. So don't forget, if you are interested to speak to us, there will be a link at the bottom and you can contact us. Good. So Steve, any final comments?
I'd just say don't put off if you're struggling with any aspects of your business, particularly around the financials. Go and get the help that you need. Surround yourself with people who've got more knowledge than you have, and wherever you can, outsource that speciality, if you like, whether it be accounting or marketing or anything else, because it will free up your time to focus on what you're good at and focus on the strategic side of the business. So always try and surround yourself with people who've got more knowledge than you have in a particular subject.
Good. Thank you very much, Steve. So, as I said, in the description of this video, you will find a link, you will find contact details for Steve and I, and you will be able to ask us questions. And if you want to see our future interviews and videos, or you want to know more about accounting and how it should be done, please follow us, subscribe to our channel, and we will be happy to have you on board. Thank you very much.
Thanks for inviting me, Sam.
Thank you, Steve.